Hello everybody, Brian here from labs.net. Today I am going to talk about CFDs regarding the signals and what you can expect in the packages, how to download them and how to interpret them, how to use them. First things first, every 6 hours we will send out signals for CFD. It'll be in the same format as this. It'll just, instead of crypto, it'll say CFD with a link and potentially a link to the actual zip file. Once you download the zip file, you will get a package and it will look and contain files like this. So we'll go through those in a minute. And how do you get to this point? Well, all you gotta do is come under the analytics dashboard, look for CFD analysis tables and charts systematically generated, and all you gotta do is open her up, and what will happen is you will get access to this page, fill in your details right here, your email, download, and then you can download that at any time. Also, as I said, you will get CFDs, the latest batch, sent to you every 6 hours, every day. So let's talk about the files, what's in them. So first thing about CFDs is some of them don't have a lot of liquidity. So you may see the pricing not change for hours on end, 4 hours, 8 hours. I have seen it that long. So you will have to go through the rank file to see the price difference. So let me show you that. In here we have some PNG charts, graphic charts. We also have Microsoft stuff, a couple of CSV files, comma separated value, as well as Word docs, and Excel somewhere in there. There should be Excel right here. Okay, so let me show you, first things first, the ones to be kind of cautious on. You will get these occasional charts, the volume on an hourly profit. Now, again, this data comes from Oanda. Some of these are not very liquid, so be aware of that. You can easily capture that in the ranking Excel file. I'll show you in a minute. But these are the hourly moves in these CFDs, and do pay attention to that. The prices may not move because there's not enough liquidity to move them, so they can get kind of stuck for hours on end, as I said. So be very, very aware of that. Also, we also have the volume as well, and this will show you. This radically changes depending upon the time of day you're looking at this. So obviously, if you're looking at when the European markets are open, your volume for European indexes, stock indices will be up. If it's the U.S. markets are open, probably the U.S. indices will be the dominant volume, and sometimes it may be also Hong Kong, let's say, for Asian time frames. So right here, Hong Kong is leading the volume. Number 2 is NASDAQ 100 in yellow, and then number 3 is US top 30. Everything else I don't really pay attention to, but let me show you the rank Excel file now. Okay, so this is the Excel file. So you can easily load it up in some program that reads the Excel. In my case, I'm using LibreOffice. You can definitely use Microsoft or Google Docs as well. So I've shown this before in the forex examples as well. You can do different sorts to interpret different things. So for instance, if you want to see if there's any buying signals at this time, again, these files do generally get updated every hour, and you can go in and download them at any time you want. So you'll be able to capture any. Right now there's no buy signals, there's no sell signals. There can be a volume, as I said, is a big factor in these things. So you can sort by volume on all of them. How many do we have here? I think we have 34, 33 assets here to choose from. So I'm not going to get into what they are, except one by one. So let me just sort these for some kind of use. So let's say if I want to sort by volume, column I, so just go sort by column I, so we can see the by volume. So here you can see the NASDAQ 100 leads, top US 30, SPX 500, followed by the Deutsche. And now, hold on. Did I do this? Did I mess this up? So we want I'm always doing this. Column I. My apologies. So, oh boy, we're not starting off all that well here. Okay, so we want column I. Column I. Hello. Okay, so descending and okay. So here we go. Okay, well, it doesn't matter, but you can pretty well see that the leaders would be NASDAQ 100, followed by probably the Hong Kong, so on and so forth. So you can also sort by a volume, momentum, standard deviation, which is another way of saying volatility, slope, and some statistical information on the R value, P value. This is the closing price. So here you can use this to monitor which, that's the latest closing price, most up to date. So if that has not changed hour by hour, it's safe to say that there's not enough liquidity to move that CFD according to what is being downloaded from Oanda. So let me try this again. I'm going to try to sort by momentum on column J. See if that works. So the momentum, is this right? So we can clearly see which ones are the most profitable in order. The US followed, like I said, the NASDAQ 100, US 30, SPX 500, the Deutsche 30, and then the Japanese 225 in that order. Measured by slope, but you can, or sorry, by momentum, but you can also measure by slope as well. So let's see if we can do that. So slope is column N. So hopefully this should work in the world of LibreOffice. So we have comment N there, column N. Okay, so momentum. So now we are sorting on by slope here. So yes, so now you can clearly see by slope that the Hong Kong 33, Japanese 225, and the Indian 50 are the top two with the most profitable, the strongest slopes. So those are quite interesting to show that the Asian, Japanese, then the Indian 50, then the NASDAQ. So in my mind, since this has been generated, that the Asian indices are outperforming against the US. So take note on that. Also, if you want to sort on volatility, you want to do that on standard deviation, column K. So let's just do that as a last example. So this is a very useful file. So here we can see which ones are the most volatile, which kind of makes sense. Natural gas, then oil, then Brent crude. So what we have here, the most volatile are natural gas, West WTI oil, Brent crude, oil, then sugar, in that order of most volatile. So again, these can be useful. Now from there, there's this file. And we also do, let me just keep that open for now. So in here we have the usual Word document reports. Right now I've shown you what's profitable by volume and by profitable as well, the CFD bar, our profit, that one as well. Now when you look at the current profitable by slope, meaning this guy right here, as I did that, we had Hong Kong 33 as the steepest slope, so that again, that's profitable, and that had the most volume as well. And that would make sense because it's two things going for it, is that obviously it shows that that's the strongest profitable right now out of the selection of all the CFDs out of Oanda. On top of, would make more sense as well because Oanda is technically based out of Hong Kong, so I guess they're imagining there's more Hong Kong or even Chinese clients, so that's probably why there's more volume on Hong Kong as well. Just things that I'm speculating here. Okay, so there's that. So now we have all of these different Word documents that we can look at. So here we have some shorting opportunities in this FX short docx. So let's take a look at that. Now, so again, these are usually updated every hour, so it's pretty good. Typically how it works is no different than the forex. We have the group mean as well as we have the volatility. So our volatility for the group is 0.006. Meanwhile, our group volume is 203. So, oh, I'm sorry, we got the FX shorts again. We did this before. We want our CFD shorts. So right here, so I can tell right there that is blank, no shorting opportunities. But we do have long, again, that is pretty well blank. So we have two files to look at, CFD long based on trend and the other filtered on volume. So why don't we look up based on trend? See what it says here. Alrighty. So depending upon liquidity, these CFDs can be pretty profitable depending upon what happens in the markets globally. So once again, we have in order here the US 10-year, and then again we have our usual cross and sell signals. Some of them are valid, like this one to here was a valid move. Downward trend. We have some more open opportunities. We need to track the pricing to make sure that this is a liquid CFD. I don't think it is, just so you know. So some of these may be useful to trade every 6 hours, maybe once a day. Very long-term strategies for these guys. So again, you can see that it's pretty close to being evenly distributed, positive versus negative returns on a daily basis. Here you can see we had some periods of up moves. So we could have made some nice, a little bit of cash here between November and January, and now it's gone into this trading range and overbought as well with the RSI. So of course you want to look at the moves. 4-day move here is pretty good. Then came back with a 3-day negative move, goes into a short trade range, and then it seems to be caught up in that. But you got to really watch these. But you can clearly see the momentum's gone quite positive recently on this USB 10-year. But once again, you're not seeing our usual harmonics and candle patterns. I think that's due to these are just not, there's not enough data to generate any of those because it's not liquid. So you have to, again, you have to be kind of careful on, but the moves can be really extreme if you get the right calls in your favor. So this one is the gold silver ratio as a defense play. This is quite good when the markets go crazy. You can see it's been a slight uptrend. So this can be useful, but again, it's very tight. But when the markets go crazy negative, this particular CFD does quite well. Again, this is silver, gold against silver, or one or the other. I always get these two confused. But you can see here, we have more negative moves quite clearly as the markets do better. This does not do well. And again, we're in during the summer, it did well a little bit. Surprisingly, it didn't come up as fast when the market melted down between October and December. So I don't know how to gauge that one, but it's a good defense play. See here, we had some nice up moves as well. All right, so standard deviation. This is Deutsche 10-year bond, Again, this is a defense play. It is pointing up. This has got a little bit more opportunity here, but it currently on the Fibonacci definitely is overvalued. More negative moves daily, but you can see here, this is quite interesting. From November, it's been nothing but on a nice trend up. Quite good, quite good. Same with the 90-day outlook, and but it seems to be quite volatile. These are definite long-term trading opportunities. Okay, so that is based on trend. So I only like to do the top 3 usually. So let's do the ones on volume, because obviously the ones that have the better volume do better. So let's check out that. And okay, so these are at least 100K. So here's our standard group mean and our volatility mean. So right now, in terms of volatility, the WTI is definitely twice as volatile. So this will be an interesting one to see how this does. Okay, so I don't know if you guys follow oil, but here in this time range, it's run up, come back down. It may go back up, we don't know, but it's trending up. That's good. That's pretty good. This has opened up a little bit on the Fibonacci level. Some more positive reviews here. That's pretty good. Sudden rundown, and it seems to be coming up. 90-day outlook. You can see here is undervalued throughout November, and it had a really long. So this may be a bottoming process. Cannot say WTI, but it's in a range bound, but it's hard to tell if it's gonna go up or not. Again, the harmonics and the candles are not here to help out. So here we have the Deutsche 30 coming up a little bit, and then it came back down, trending up. That's good. Again, very tight Fibonacci level. It's really hard to trade. This seems to have more negative daily returns. A steady trend down, but it is coming back. Look at the momentum. It is positive here. The RSI is being pushed up, so there may be some potential here. And again, these are the kind of bars we want to see. That's a nice bar, obviously. So now the US, let's just do this as one last. The USD, can't remember what this seems to have less volatility than the group. Not as high volume. But here, that's a nice buy signal. If you caught that, you'd be doing pretty good. Here, you know that the trend's looking good because it's positive. Again, it's overvalued. It did dip, and that's probably why we have a new recent rally for January 2019. I would say that just slightly in the last little while, there has been more negative returns, but it is bouncing back since January, and it's had a nice tear, as you can see. But the thing is, what you want to look for in these, again, is that RSI, because it is approaching 70, so it will probably drop back, but it may already starting to happen because the momentum's starting to taper off as more people get out of the U.S. market. So it's starting the rise. The rise isn't as strong, but on the other hand, recently it's looking okay. And then we could go on. Let's check out this Hong Kong 33. So comparative 171 for Hong Kong 33. This is, the Hong Kong's definitely got more volume. 008. See the volatility comparison between that and Hong Kong. Hong Kong's an interesting one because you can make some nice easy money with it. It's not, oh, actually I would say it is more volatile, but you can see all the false positives, but it is moving up, trending up, good, and it's breaking trends. So this may be a time to get in as a classic entry. right here, it's in that golden zone still, so it's still worthwhile to look at. Evenly distributed on the returns. Here it's got a nice run up. But again, here's what we got to look out for. It's approaching that 70. It's still positive momentum, but you can clearly see on the 90, it's just had a nice run up. Still positive in momentum, just touching on the 70 RSI. And you can clearly see this is on a 30-day. So there you go. And the Nasdaq's got a nice strong slope as well. So hopefully you can kind of work with these and only work with the CFDs. I would recommend probably on this one only, based upon volume, and just use those ones that get listed in this report. Let's see what else we got in this package. The usual P&G Fibonacci that we've already looked at. Most profitable. I haven't really shown these reports in detail, but they may be already included in the Word docs I've just shown. So here we can get a snapshot on what's happening between each one, so you can somewhat see which ones look good to trade. The other factor you need to always factor these spread costs. I've already explained this in the forex example usage, but let's just take a look at these anyways. So this is the bid and ask, so let's check this out. So here, these are tight. There's virtually no spread cost at all because you can't see the difference between the bid and the ask. That's good. Same with the Nasdaq. That's good. I don't know if it's because of lack of volume, but it looks pretty tight in there. So these are looking pretty good. There's some spread cost on the WTI. It's very tiny, nothing compared to what you saw in the spread cost of some of the pairs I showed in the world of forex. So again, these packages get sent out every 6 hours, or at least a courtesy email, and they can be useful for you for your analysis. Hopefully you got something out of that. Let me know. Talk to you later.